here with Charles Funk, CEO of Heliostar Metals. Heliostar trades on the TSX Venture under the symbol HSTR and on the OTCQX under the symbol HSTXF. Their current market cap is $42 million Canadian. Charles, can you give us a 30-second high-level overview of Heliostar Metals?
Thank you very much for having us. Heliostar is an ambitious company that's looking to build the next major gold mine in Mexico. We bought up a very advanced project early last year. We have a view that it makes much more sense as a very high-grade, very profitable underground gold mine, and we're currently growing the resource, stepping through the studies to make a construction decision at the end of next year. What's unique about Heliostar is we want to build a mid-tier gold producer, and Paula is our first step along that pathway.
Great. Thank you to everybody tuning in to today's webinar, and let's jump in. So you acquired Paula from Argonaut Gold in February 2023 for what will eventually cost $30 million US. What did you and the team see that others didn't?
So first of all, we saw a market that you could buy advanced resources a lot more cheaply than you could discover them. So we took the strategic view that that was a better outcome for our shareholders in what was a pretty tough gold equity market. And projects specifically, we had a couple of rules really were important to us. One is we weren't prepared to accept resource risk. There's lots of low quality resources out there, and in our opinion, they'll always struggle. And secondarily, we had to see an opportunity and angle that we could get an undervalued project with a lot of upside. And so Paula's had $100 million invested in it prior to our acquisition. It's permitted for open pit mining in Mexico, which is extremely valuable today. It's had a PFS completed on the open pit scenario. But you can almost think of it as this sort of giant sea of low grade with these high grade zones in the middle. And the high grade panel at the core is spectacular and where all the economics really sat. We recognize that instead of sort of focusing and struggling away and with some technical risk on the low grade, let's go underground and let's mine the high grade. And we've had a bit of good fortune over the last 12 months. It's only been 12 months, but that high grade's grown significantly and proven to have a lot better metallurgy than was previously thought. So we identified that, but we've been even more pleasantly surprised on how good that core of the deposit is.
Can you give us some examples of a potential intercept through the high grade panel and kind of rough dimensions of what we're talking about here?
We put a resource update out in November last year. It's just over 700,000 ounces in the M&I category, another 450 in inferred. Averages 6.6 grams at the M&I and 4.3 at the inferred. So a very high grade deposit. The dimensions of the high grade panel are approximately 280 meters long by 100 meters tall by 60 meters wide. It's an incredibly wide, consistent ore body. So we regularly drill 100-meter drill holes at 5 to 15 grams per ton. That's one of the most unique things about this ore body is the consistently very wide, very high-grade results. And ultimately, that means profitability. So not many companies in the world can consistently drill these kind of results.
When I was at site last year, that was something that really stood out to me at the core shack. You guys had all the core laid out and you had each box colored by assay, and it was just sample after sample of continuous mineralization. It was it's pretty impressive compared to some of these other deposits out there.
Yeah, it's not a vein deposit. So it's not a vein where you hit high grade and if you miss, it's all dilution. If we miss the 15 gram dirt, we get 12. If we miss 12, we get 10. That means bulk underground mining is the likely option, and that significantly lowers our costs. So it goes to margin, but it is unique. I haven't seen many projects like this in my career either.
Anyone following Heliostar is undoubtedly impressed with what you guys did last year. Can you walk us through what you achieved in 2023 and what the implications of that work are?
Yeah, thank you. I'm very proud of what we delivered last year. The market maybe just wipes its face. We're a similar market cap to what we were, but technically we achieved a lot with the project. We had a number of goals that we actually laid out in a press release with timelines of when we would deliver them, and that pride in the team comes from our and their ability to deliver that on the timeline that we laid out. There was three key takeaways really that we thought we could change. The first was growing the resource. So we added 300,000 very high grade ounces in that resource update. And we did that at around $16 an ounce. So it was a very efficient use of capital, which it has to be in those tougher markets. Then the next one was we believe that high grade could come forward in the mine plan. And so there's 200,000 ounces at better than 10 grams per tonne. That's very likely to be the start of the mine life. We're doing the PEA at the moment, so to be very clear, we do not have numbers on that. But hypothetically, if that's $100 a tonne rock worth $500 a tonne, it's hundreds of millions of dollars of free cash flow if you could get into a zone like that early, which is clearly our intention. And then the third part was the metallurgy. The Halo doesn't have the best metallurgy. It's one of the reasons we didn't like that scenario. The door was open, though, for the high-grade panel to have significantly better metallurgy. It's a bit later as a gold event. It's a different style, slightly different style of gold mineralization. And we exceeded even our own internal expectations. We demonstrated an 80% recovery with a conventional 75 micron grind flotation CIL of that material. And in reality, that was probably the biggest de-risking result that we delivered last year. It got overshadowed by the results and the resources happens. But those three were the big step changes. And now we're working on a PEA this year to show what that'll ultimately mean from an economics perspective. But pretty significant transformation of Ana Paula in 2023.
Most of the historical metallurgical work was on the Halo, from my understanding, and not that high grade panel. And so for you guys to show that you could potentially get 80% recovery, using a conventional CIL flow sheet, to me that's a significant game changer. So what are the next steps for metallurgical testing to further de-risk Ana Paula on the processing front?
We've got a couple of steps underway. In the PEA, we'll be doing an update and showing that metallurgy at a greater scale. We'll probably capture the high-grade core and the distal material in a couple of composites for the PEA. We've got a whole series of internal trade-off studies that is looking at further optimizing that, potentially a regrind on the back end, still looking at some of the flotation options. So we'll continue to experiment to further improve. Or potentially further improve that. For example, that result didn't have a gravity circuit on front of the CIL, so we think there's more that we could look at and do there, and that'll ultimately move into the feasibility scale metallurgy next year. Showing at a greater scale, doing some additional test work, finalising on a flow sheet for the feasibility study next year is what's coming from metallurgy.
On the theme of de-risking, you announced on February 9th that you were evaluating test mining scenarios for Ana Paula. So what is the thought process behind this? What does it look like? And why is it important for Heliostar, your shareholders, and potential suitors?
I think stepping back a step, I think gold companies have done, in my opinion, actually a pretty good job of creating value over the last couple of years, despite pretty tough equity conditions. The challenge that they've faced is the cost of capital has been so high that share prices have either been stagnant or gone backwards to deliver that, which doesn't, the project works, but the business fails. We've tried to be, with our view that we're going to own this as a producer, we think about this a bit differently. And so obviously the warrant incentive last year was a way of trying to demonstrate that management's trying to be creative and look after our shareholders and ourselves. There's a selfish element to it, but it's mutual alignment in owning more of it to production. And the bulk sample has the potential to serve a number of options, which is why we're doing quite detailed work on it. It, from a technical and de-risking level, demonstrates that takes the decline out of the capex, out of the future capex, puts hands on the ore body. So there's no substitute for being in the ore zone for confidence and de-risking. It lowers the cost of infill drilling. From a growth perspective, which we'll get to, it's a good platform for the deeper drilling. The resource is open at depth. And from a financial engineering or from a shareholder perspective, it's the potential to advance the project without equity financing. We believe from a number of options that we're looking at that there's going to be more gold in the bulk sample, and the value of that gold is going to be more than the cost of doing it. So a great way of moving the project forward and de-risking it without issuing equities in tough equity markets. So it serves two purposes, as you touched on. First and foremost, the de-risking, but it's not lost on the potential impact to our shareholders of moving this project significantly forward without new share issuances.
Kind of switching directions to geology and exploration for for a question here. Where in the stratigraphic package does Anapolis sit in relation to your neighbor Torex, whose past production and current reserves total 7.5 million ounces?
Yeah, we're in elephant country between there and Los Filos. These are big deposits, and I think there's a great slide that we have in our deck where you can see those mines standing on Anapola, and we're just at the top of that. So in terms of diving into the geology in a bit more detail, you could almost break the Guerrero Gold Belt into three areas. There's a basal limestone package. Think of it like a Great Barrier Reef or any coral reef, which is a great chemical sponge package. Then on top of that, there's a series of sort of deeper sea sediments that are variably reactive or not. In this case, in Guerrero, they're good reactive rocks as well. And then over the top, we believe there's an older belt with some volcanics that are also prospective thrust over the top. So we're getting quite into the detail here. As we understand, Torex's project is located in that deeper limestone. It's a classic skarn where the fluids come up and react and dissolve that rock. And we know that that then evolves into the shallower levels and expresses a bit differently in the way that Anapola does. That's why Anapola has these unique widths and grades, because of the host rock that it's in. So we've moved where we think that the setting, we think Anapola is a bit shallower than maybe it's previously been considered. And the most exciting part of that interpretation is it means all that potential sitting under our feet. There's the potential that stratigraphically all of the Morelos complex is still to be found, or an analog that is still to be found under the open resource.
That's one of the things that gets me excited as a geologist, thinking about potential decline extension and setting up a platform to do some deep drilling, because there are a couple of deep intercepts that have grades and widths that are similar to the high grade panel that are open for expansion.
Yeah, some of those deeper holes, 13 meters at 29 grams, 40 meters at 6 grams. The reason the decline was being put in by a previous operator is because it has that potential. I'm very confident we can grow this to 1.5 to 2 million high grade ounces in the top 250 meters. Whether it becomes a monster like its neighbors, the decline will certainly help us answer that question, but it's got all the potential in the world to do that.
So in addition to targets at depth, if you're looking through the presentation, you also have some near surface targets that are parallel to the high grade panel. For someone that's maybe not familiar, they'll look at it and they'll see a bunch of historical drilling, and they'll think, where is there actually potential to add new mineralization here? Can you speak to that a little bit and why explain the logic potentially behind those drill targets?
You can't add the M&I and inferred resources, but we've got 700 M&I and 450 inferred today. We think we'll ultimately grow from just expansion in the high grade panel and the parallel panel, this zone immediately to the north that we found, to somewhere in the 1.5 million ounce range. Ultimately, we'll try and get all that into measured and indicated. So I think there's ounces we can clearly add with a drill program this year. And where you're heading is what you saw at site. And this is kind of a flippant statement to make, but what we now understand about Anapola is it was probably drilled 90 degrees in the wrong direction. Now, I don't say that to be smart. We would have started exactly the same way as was done before us. The rocks dip to the west. You should drill from west to east. But we've learned that the controls on this high grade, this underground mineable mineralization that we're targeting, is east-west. So they should be drilled in the other orientation. We added ounces in the high grade panel, understanding this. We discovered the parallel panel only 50 meters north that I think will be 100 to 300,000 ounces through this technique. As you step to the north, for more of these that have just been drilled on the wrong orientation and need a systematic north to south drill program, there could be 3, 4, 5, 6 of these. That's part of the excitement, that this low-grade halo has not been well explored for high-grade mineralization, and I think there's a lot more to come there. I'm not sure what that number is, but it's definitely going to be part of our 2024 drill program to put some holes into those parallel zones to the north.
So this is an election year in Mexico. What impact do you think this year's election and possible government change will have on the mining sector? Do you anticipate it causing any delays in approving your modification of the existing open pit permit to an underground permit?
I'm not a political pundit. I try not to be a pundit on too many fronts. And clearly, the law changes in Mexico haven't helped the perception of Mexico and the electioneering. certainly hasn't. Perversely, it's probably made a project like Ana Paula more valuable because of its permitted status. It doesn't have a material impact on our plans. We intend to complete the PEA and then submit the modification. And you can go back to our record, we'd modified Ana Paula from open pit to underground before any of these proposed changes were introduced. It's nice to be going with the tide instead of against it. Ultimately, our MIA modification, our permit modification, will be to reduce our overall environmental impact. We plan to submit that after the PEA, which we anticipate getting back in the second half of this year. So the election doesn't have a big impact on us. I think the likely winner is likely to run a well-organised government. So I think that's a beneficial for anyone dealing with any government bureaucracy. So I think the signs are positive. I sort of ignore the electioneering part of that. I think overall, Ana Paula, I don't think anyone can beat us to production, like major scale production in Mexico. I don't think the election has a big impact on that.
2024 and 2025 are going to be full of big catalysts for Heliostar. Can you walk us through your 2024 and 2025 plans?
So we have, I think, two pathways that we're pursuing. The first is the more standard. So we will deliver the PEA in the second half of this year. We'll use that to modify the permit, and we'll drill 10 to 15,000 meters of diamond drilling. That's our plan for this year. We'll provide a greater update on some of those timelines over the next 6 weeks, but that's what we plan to complete this year. That will roll into a feasibility study with aiming to make a construction decision and completing feasibility at the end of next year. Most companies give up time too readily, and time's a killer for the valuation of projects. It's something unique to the business proposition of Heliostar. For example, if you build the same mine in 3 years that you could build in 10 years, it's worth twice as much in an NPV8 environment. That's the power of moving quickly. So that's why we have this second stream available to us, which is to complete the decline using a combination of gold forward sale or debt or stream solely on the bulk sample. They're the options that we're reviewing. That would complete the decline, potentially give us the opportunity to continue to toll mill if we make that permit modification. So it opens up a lot of doors and a lot of optionality for the company mid next year. Pushing both pathways forward, we think is best for our shareholders, with an aim of making a construction decision at the end of next year. And you typically look at an 18-month timeline for construction. So we could be a 100,000 ounce a year producer in 3 years if we keep this aggressive timeline that we've been working to.
I mean, regardless of whichever timeline Heliostar follows, it's going to be an exciting project to follow this year. Either or, there's going to be a PEA, resource growth, and additional drilling. Thanks a lot, Charles, for joining us on our first 3L webinar.
Thank you very much for having me.